Okay, so you're in the middle of a very scary stock market right now, and you're probably wondering what's going on and where all your money went. Well, I'm gonna tell you where the money resides and what's going on with the stock market right now. So get comfortable, buckle up your seatbelt. We're gonna get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. This is theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black economics and Black wealth building every single day, sometimes as much as 10 times a day, under one condition: you must be B1. B1 means that we are Black first. We put our community at the top of the priority list. We don't hate anybody, but we always make sure that we take care of our own problems before we solve anybody else's problems. B1 also means that we believe that within the next 50 years, Black people can actually be leaders in the world in economics and wealth building. B1 also means we understand we must be one in order to be successful. If you agree with that philosophy, put a hashtag B and the number one in the chat. Put a hashtag B1. Now, let me know if you can hear me. Let me know if you can hear me. Okay, give me a yes in the chat if you can hear me, because I can't hear myself. I hit a button. I thought I'd be able to hear the audio, and I didn't hear the audio, so I'm kind of worried about that. So give me a yes in the chat if you can hear me, okay, so I know I can move forward. How you doing, Miriam and Warren? And thank you, Croy and Keisha. I appreciate that. Okay, looks I look great. I'm seeing a bunch of yeses. That's good. All right. So, and by the way, I got a new camera, so I don't know if y'all notice the difference with the camera. Let me know if I look a little bit more crystal clear, a little more shiny and black. All right. So what's up on the Instagram? Hey, everybody on Instagram. My Instagram is The Real Boyce Watkins. So if you like intelligent conversations, feel free to go to my Instagram, The Real Boyce Watkins. Now, the stock market. Okay. So how many of you got buried and murdered in the stock market today? Let me know. Give me a yes in the chat if you got your butt kicked today. If you're feeling a little bit angry, if you're kind of like, just a little bit upset about what you were seeing in your stocks, give me a yes in the chat. I took a hit like everybody else. We all did. Today was a tough day in the market. I got to go double check, but I believe the market went down about 800 or 900 points today, which is pretty massive. Last time I checked, it was about between 2 and 2.5%, maybe about 2.3%. And that's the worst day, worst day of 2021. And this is a big deal. Some see it as a buying opportunity. Some see it as, a sign that things could get worse. So I thought that the way I could help you and help you sort through all the nonsense is to give you some notes on what I've been seeing today. I've been researching it all day, reading stuff, going through things. And those of you that are in the Black Stock Market program, you can actually leave your questions for me, and I will answer every single question that you submit in class tomorrow. We have stock market class every Tuesday at 11 a.m. Eastern. So if you'd like to join, the first month is free. It costs nothing for the first month, $0.00. So go to the blackstockmarketprogram.com, log in, leave me your question. I will answer it tomorrow. I will answer every single question that you have. And I'll look up, if you ask me about a stock, I'll look up the stock and tell you what I think. Okay. So the URL is right there on the screen. All right. So the first thing is, a lot of the market decline today seemed to be driven by what was going on with the pandemic. The pandemic ain't over. There's still some pandemicing left to happen. And apparently this Delta variant is causing a lot of uncertainty. And the thing is, that's interesting about uncertainty is that, how they say there's nothing to fear but fear itself. Well, there's nothing more uncertain than uncertainty about your uncertainty. And now what does that mean? That means that not only do you, so it's one thing if you know something bad is going to happen or something good or whatever, right? But when you don't even know whether it's going to be bad or good, how long it's going to last, what that bad thing is going to be, is it going to be kind of bad or really bad or a little bad or maybe good? That right there is another layer of problems that you have. That's a sort of a second tier level of risk, because you're not just dealing with bad news or good news. You're dealing with the fact that you don't know if it's bad news or good news, and you don't know what the news is going to be. So right now, uncertainty really is the word for today. That's what's really causing the market to drop. And most of these valuation models for stocks, the models that you use mathematically to determine what a stock price is going to be, are designed in such a way that when uncertainty goes up, prices go down. So that's why a lot of your stocks have been hit. Now, what I want to warn you guys about, this is a big warning for everybody who's invested. Be careful about these meme stocks. These meme stocks are getting their asses kicked. These AMCs, these GameStops. I've been, I don't care. I don't care how mad people get. I know people have an emotional attachment to some of these companies, but it would be entirely unethical for me to tell you that it's safe to continue to invest in these companies. If you're a day trader and you know how to predict, how crazy people are going to be on a given day, then go for it. Roll the dice, do whatever. But if you're talking about investing long-term for your family, I don't think AMC is the place to go. Professional money managers ain't touching it. They're not touching. They're not messing with Dogecoin. When they're running with billions of dollars, they're not going to put billions of dollars in Dogecoin. That's a bet. And some would say even a sucker's bet, but I'm not calling you a sucker. I'm just going to tell you that is Vegas. You might as well go to Vegas and put your money on black, and I hope for the best. Put it on black. Don't put it on red. When I always bet it, on roulette, I always put black just because I don't want to have to think about it. So uncertainty really is kind of the big thing that you're dealing with. And what a lot of people believe now is I'm reading, what experts are saying and talking to them and kind of, taking things in, is a lot of people feel that this could be the end of a really crazy speculative period with stock investing. Last year, money was falling from the sky. Last year, the reason that you saw such a rise in the number of people participating in the stock market is because it was easy to make money. Last year, everybody's an expert in the stock market. Everybody's online saying, "Hey, I'll teach you how to invest." And really, that's like me teaching you how to drop this lid, this bottle lid. Like anybody can do that, right? You could be a 2-year-old and drop this, right? Because literally, it was that easy to make money. Everything was going up. Everything was taking off, right? Now you're getting into some interesting territory. You get into territory where some sectors have potential, some don't. You're running into something that is a real big economic monster called stagflation. Give me a yes or no. How many of you know what stagflation is? Give me a yes or no if you know what stagflation is. As you hit the thumbs up button, please hit the thumbs up button. And I'm going to tell you guys what stagflation is. Hit the thumbs up button. If you do that for me, I will break down stagflation for you. Let me know if you know what it is. I'm going to see how many of you have ever heard of stagflation, if you know what it means, how it works, or anything like that. Okay. All right. So Keisha, thank you, Keisha and Jordan. All right, good. So stagflation is when here's the thing, right? When the economy goes bad, you do things to make the economy go better, take off, right? So the economy's slowing down, you pour money in supply, you increase the money supply, you pour more money, you do what they call stimulus. You pour money into the economy to make it speed up. So it's like your car is slowing down, you hit the gas, your car speeds up, right? Now, your fear at that point or your concern is you don't want to hit the gas too hard, because what's going to happen if you hit the gas too hard? Well, you're going to crash, right? You're going to go too fast, right? You're going to be going 300 miles an hour down the road. That's not safe, right? So you want to hit the gas just enough to pick up the speed of your car. Well, the thing about economic growth is that when you're putting that stimulus into the economy, when you're stimulating the economy, the big thing you're always watching is inflation, because inflation is when you have an overheated economy. For the first half of the year, that was the big concern. Is the economy going to overheat? Are we doing too much? Are we increasing the money supply too much, right? They're constantly trying to calibrate that. Well, now we're getting to the point. So here's the thing. Nobody was worried about slow economic growth. Nobody was worried that that we might go into a recession. Right? Everybody's like, oh yeah, we got all this pent up demand. When everything opens up after the pandemic's over, then restaurants will be full. People will be going to amusement parks. People were going to concerts. People will be out shopping. Money is going to flow everywhere, right? So they were assuming that if there was inflation, there would be rapid economic growth, right? So at the very least, even though you have too much growth, it's like you have too much of a good thing, like you OD'd on chocolate chip cookies or something, right? So at least you die with a smile on your face. Well, stagflation is actually when you have this ugly double whammy where you've got inflation coupled with not fast economic growth, but slow economic growth. So rather than overdosing on chocolate chip cookies, you're overdosing on rat poison. So imagine if you had a choice and somebody said, I'm gonna kill you. And you got two choices. You can either OD, eat chocolate chip cookies until you die, or you can eat rat poison until you die. Which one would you pick? I assume you would pick the cookies, right? You would pick you say, well, at least I'm eating cookies. At least I'm eating something I enjoy, right? Or whatever your favorite food is, right? And so stagflation is kind of this ugly bear that is tough to fight against, right? It's an economic virus for which they don't have appropriate vaccines or antidotes for this. They don't really have a good cure for this. And now the experts are starting to talk about stagflation, because what's happening, and I'm not going to get too complex here, but what's happening is they're watching what they call the 10-year bond yield. And the 10-year bond yield, when it was going up, 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 they said, oh, there goes inflation, but the economy is going to be doing really well. Well, now they're kind of like, the 10-year bond yield is low, which means the economy may not be doing so well. Oh, but the inflation is still coming, right? Because you've got two types of stimulus that go into the economy. You've got the monetary stimulus, which is from the Fed, where the Fed is pouring money into the economy by buying bonds back. That's how they increase the money supply. And then you've got fiscal stimulus, which is that big $6 trillion, $3 trillion, $4 trillion, whatever the trillion it's going to be, package that Biden is trying to push, where he's trying to actually push money out there and really get people working and stuff like that. Infrastructure bill. Lord knows we need more infrastructure in this country. So monetary stimulus is kind of a figment of your imagination. It creates what they call the wealth effect. The wealth effect is where people just feel wealthier because you got more money floating around. So because they feel wealthier, they start doing things. They start spending and investing because they're like, oh, I feel wealthier, even though I'm not really wealthier, but I just feel wealthier, right? So that's kind of a mind trick. It's a little bit of a mind trick. Whereas fiscal stimulus can be real if they actually put the money in the right places in the right way, support the green economy, rebuild the infrastructure, and actually put people to work. They can actually create real economic, meaningful growth, right? So fiscal stimulus is a good thing. Monetary stimulus is eventually going to cause inflation. And therefore, the big concern right now is this ugly bear of stagflation. So what I will say is that in general, if you want to know my stock pick of the day, the stock I will throw out to you guys that you can feel free to take a look at that I actually am investing in is Shell. Shell Oil, the A-class shares. Shell is out of Great Britain. And basically, I like the stock because the experts say that it's pretty much underpriced. So Shell is a company that I like. If you want to see the other stocks that I like, feel free to go to the Black Stock Market program. I literally list about 5 or 6 every single week that I really like that I would buy. I don't buy them all, but these are stocks that I would buy if my capital wasn't all deployed. So what happens is I see all these great stocks that I'm like, oh, this is a good one, that's a good one, but then you run out of money, and so I buy everything I can. I'm an investor. I love to invest, but what I'll do is for the students, I list all the stocks I would be buying if I still have more money laying around. So feel free to go to the blackstockmarketprogram.com. That's the URL. Let me give you a couple more thoughts before I head on out of here. If you could hit the thumbs up button, please hit the thumbs up, share, subscribe button. And like I said, tomorrow we meet for class at 11 a.m. Eastern. So if you have any specific questions about a specific stock or anything like that, just log in at the blackstockmarketprogram.com, leave your question. There's a link in there where you can leave all your questions and I will answer every single question. That's what I do at the start of every class. The other thing I will mention is that there's a lot of people that feel that buying into financials like the banks could be a good move. They feel that as the 10-year yield goes up, which they expect it to, that the banks will be the first beneficiaries of that, and that the banks tend to get hardest on a day like get hit the hardest on days like this, which means that some of them may be underpriced. Also, I'm going to say in general, when you talk about anything that's speculative, anything that was like the crazy easy money, all the SPACs, special purpose acquisition companies, I mentioned to you guys that SPACs are dangerous because SPACs are basically their way of kind of getting your money because they know that you're investing in anything. So SPACs are going to kind of probably go down a little bit. There aren't going to be as many SPACs or as many IPOs or as many companies that are going to be selling their stock because they feel, in a way, I think they're realizing that the gig is up. That a lot of the meme stock believers, the AMC apes, they're backing off because they're getting killed. They're literally getting murdered financially. And also there's a real risk and a real concern about Bitcoin as an investment asset, not blockchain, not Bitcoin as a long-term, a long-term asset that can be used for a variety of reasons. But Bitcoin priced at 30,000, 40,000, 50,000. There are people that believe that even Bitcoin investment and speculation could decline, largely because a lot of the money managers are starting to shift their money out of stocks and over to bonds because they're starting to feel a little bit shaky and they want to protect their gains. So I would be extremely careful about all the meme stocks, really careful about crypto, really careful about any SPACs that you look into, because you're getting to a point where a lot of the experts are taking what they call a more defensive position when it comes to their assets, where they're not trying to necessarily make money as much as they're trying to protect their money. So ultimately, that's where we are. That's what I'm saying. And I hope that this helps you kind of understand what to do and what your next move might be. All right. So by the way, financialworkbooks.com. If you have kids and you want your kids to learn to invest, we have investment workbooks and flashcards that we created with Black experts. Feel free to go to financialworkbooks.com if you want to take a look at that. And also, one more thing I'll give you. This is actually free. If you go to blackfinancialsecurity.com, I have a lecture on on the steps to create financial security. A lot of you have asked me about this, like, so what should I do? How do I lay this out? Well, I lay all this out in one lecture, and I guarantee you, my lectures are all pretty good because I know this stuff extremely well. And so if you sit down and you spend that 40 minutes watching that lecture, and it's free to watch, I guarantee you'll learn some things that will change your life, and not just your life, but the lives of your children and grandchildren and great-grandchildren, because I know this stuff extremely well. And this financial security is actually pretty easy to obtain if you know what the simple tools are. So I will focus on that, and I would have your kids focus on that, because there aren't too many things that matter more than your economic security. So put your kids in a good position. Don't leave them out there high and dry like your parents might have done you. Let's do better by our children. Okay. So I'm going to get out of here, guys. Hit the thumbs up button on your way out, and I will see you all tomorrow. And I hope you have a wonderful day. I'll see you soon. Peace.